Hi and welcome to the Market Alert for Monday, the 1st of March 2021. So Friday's headline is Calm Returns, Futures Rebound as Yield Drops after Historic Pounding. If US rates stabilise at these levels, which they appear to be, then equities will find calm, which is what you would expect. And also in the bullion market, which we're talking gold here, was absolutely monkey hammered during last month as it suffered the first down move, I suppose, and correction in 5 years as commodities and crypto. So we say that commodities bull market seems to be getting underway. And it was all going so well too. Well, it'll be returning, no worries about that one, because as we go forward and they continue to print, this is just shaking the market down, marking the market down, and manipulating the market down so they can buy more. Simple as that. Meanwhile, implied volatility picked up a bit on Friday as well, because it was another volatile session, which we'll just see shortly. And still red. Well, we've gone red now on the implied volatility, but I'm expecting a bit of a bounce today. The yields have dropped a bit from Friday. If we just go to the last 5 days, and you can see Thursday's high and Friday's high there, and we're nowhere near it at the moment. So at the moment, the Fed seem to have got yields under control, which is good news for them, because if they lose control of that, then the stock market will be coming down. And then you'll see a switch in gold and move to the upside, because people will be looking for a safe haven and they'll be jumping into commodities because the stock market is seriously overvalued. So today's news, what have we got? GBP, we've got final manufacturing. No one's going to really take any notice of that. ISM at 3 p.m. for the US, maybe, and then 4 p.m. We've got the criminal out. She's speaking at 10 past 4. Okay, let's have a look at the overnights and the bigger picture from Friday. We'll start off with the Dow, and let's have a look at the daily chart. And you can see that we've got buying pressure for Friday in the Dow. So the market less in range. It's high to low than the previous day. And you can see them buying back there, and they've managed to bring the market back on the overnight as well, trading down to 50% of this move from this low to this high as well, which is also encouraging for the bulls. So it's just a matter of getting through these three fib retracements here. The 62 is going to be an issue in my opinion, and then after that we've got the 31712, which goes back to the other all-time high. We've still got the all-time high. I'm going to mark it up, but if the market gets to this level today, it'd be one hell of a move, which I very much doubt, but it's worth noting that we're still at 32,000 there for the all-time high. So these are the upside targets, plus Friday's high as well, and the close back above the 20 bar and the 5 bar is required in the Dow to move higher. Let's have a look at the DAX, and we'll start off with the daily chart too, and you can see there as well we've got a lot of buying coming in off the lows for Friday, and we've also got prices higher on the overnight. You can see them coming off that 13,663, which we looked at on Friday. The market dipping just slightly below this before moving back to the upside, which they are doing now. So what I would be inclined to do here again is just to get an idea of what strength they've got on the upside, and I'll go from here to here first just to see. And these would be the fibs. We're already through the 38, we're already through the 50, and we're stuck at 62. We've got to drive through this. We're also just sitting at Friday's high as well. We've got the 20 bar moving average at 78 as well, which would need to be taken out, and the 89 of course, and then you've got this high from Thursday where the market started to move to the downside overnight. So yeah, we opened up and we can see that prices found support at the 200 MA and have moved higher, drifted off a bit at Friday's high, which you can see here. Bit of resistance there, so it's got to get through this to move higher, back below the 200 MA, and now back to Friday's high, which is what we can see in the daily chart. So we need to break above this and the R1 in order to head back up to the upside, and then back up to the R2. Let's just have a look at these numbers in respect of the fibs. So we've got 978 and 14,000 there. So 978, yeah. So more or less 978, which is going to be around here. And then you've got the R2, which is going to be the 78 ballpark. And in fact, you can see 14,000. That's going to be the kicker for prices trading up, stopping at the R2, because it will have gone up 100 points, which is about the average, and also sitting at that 89, 78, 89 level there as well. Okay, that's about it, I think. Let's just have a look at a quick look at the silver market, which also, as I said in Friday's alert, because it was delivery, they were going to do whatever they could to get the price down so they could buy back a bit more cheaply. And they managed to achieve this as they went down to the 50 bar moving average, which I said that they potentially could, and they even went a bit lower, and then they managed to buy back in. The market closed off the low by Friday, and we're starting to move back to the upside, and are likely to see prices continue to do this now they've got the delivery out of the way. Just draw these back in, and you can see they're just above the 38% retracement at the moment. I say before, it's a long-term trade. They've been manipulating this for a very long time. They've been fined billions of dollars for doing it. But it's easy to actually see when you get to the delivery time of the month now what they're actually doing, and you know they're going to take advantage if they can. But the good thing is you've got rising lows where the market has been pushed back down. Nearly came back down to the low of this bar here, but managed to just stay above it. Okay, that will do it for a quick roundup and where we're likely to go today. And so a quick look at Friday's session, see what happened. And in the futures market, prices were moved lower, which you can see there. Then it found a bit of support. They brought the market back straight back to the low. They were going to reverse it off Thursday's down day. And then the market opened. We had a bit of a sell-off to start with. Market found support at 62%, which you'll see there's the 62, and then you'll see the green bar coming in, and there's the 62.78, and then prices started to move back, hit the 200 MA and the 78% retracement. They were selling in this bar as we've got the 78, we've got the low and the 200 MA there, but the market then came back, which you'll see there was 62% retracement. You see the 62 there, so you've got the classic up, down, and then ready to move to the upside as prices. You can see a lot of volume here and coming off the 62 and the BRN, and prices, I'm going to fast forward all the way through this now. You'll see me drawing fibs in along the way, but prices are basically just never closed below the 5 bar moving average. The momentum was well and truly established. Got a bit of a pullback there, but prices heading right up to the DP level, which is the target for a market. If we can get back above the DP, it's a bullish indicator, and we see prices then finding some resistance. We also see an increase in volume in this bar, and having traded up from the lows, there's 100 points plus in this trade. I think there'll be actually more than that. Let me just go back and check. 150 points. Then you're going to get some selling coming into the markets, and we see this, and again you see the potential weakness at the DP level, and then we get a potential short. But having achieved this objective of getting the market up, they're not going to want to let it move down, and you'll see here that immediately they try and buy back with the same amount of volume, even though that the sell signal is triggered there. But you'll also see that it's down at the 62% as well. And then it's just a case of bring the market back, and then we go long. We just managed to get back to the double top there before we see prices start to falter once more at the DP, even though we're through it, and trying to move higher, closing above those 5 bars, and then eventually coming back to the 5 bar and taking profits on that trade. Then we get another short, which you'll see in just a moment. We're just stuck in the sideways range now as prices are trying to hold. And once again, we can see that prices get stopped at the 78% retracement. And you'll see the confirmation of this. And again, even though the volume is low, it's subtle, but it's there. It's the same amount or more or less as the previous bar. So prices find support and then move back to the upside once more. Takes a moment or two to get back to that double top again. And then there was another one straight down to the 89% where the market stopped there. I wasn't on that trade at that time. I was busy on a call. But there you go. That's the morning session for Friday. And the market continued to move up mid-morning. And then, of course, we're dominated by news in the afternoon. So we're having to sit through the news initially. And then, which wasn't a bad thing because the market was sideways there, waiting for the news. No sooner you've got into one trade, the news was then out or about to come out. Just having a look there at what's going on in the bigger picture. And eventually the market came under pressure as the Dow moved lower. It was very choppy in the way that he did it. But again, you can see that below the 5-bar moving average until we got to this point here, big bar coming in there to support the market. And even this didn't hold prices. That's how choppy it was. Then it went down and then we got ready for the next news. The market sideways. And then you'll see prices testing again, and it just kept moving down. But look how choppy this is, how the market was coming back above the previous bar's high and then failing and then moving back to the downside. So let's have a good shakeout. At this point, I'm having a look at the yield. The yields have been increasing, 150, and we trade down to the close. And then again, even here, they're trying to hold it with a narrower bar, a lot more volume at the low, and then they managed to, and you can see they're buying straight back, and then prices trading sideways for a while before moving back to the upside. And this is at the point when the Fed stepped in and managed to bring the market back, as we saw in the headline originally this morning, where calm returns as futures rebound as yield drops after historic pounding. And then we saw the yield dropping as just go back here to 5 days, and we saw the yield drop in the afternoon. Just get rid of this. You can see the yield dropping all afternoon, and this was allowing the market to move back to the upside, which we saw here, free to move back. And that's why the Dow, if we go back to the Dow chart, you will see, and this one, we'll find it in a second, see the buying pressure in the Dow, saved again by the Fed. Okay, that will do it for this one. If there is anything else to report, I will let you know. But as ever, thanks for watching. See you in the next one.